Hello everyone and welcome to our channel, The Mutual Fund Guys. I'm Samir. With me is Mahesh. Both Mahesh and I are partners at AMS Investments, a mutual fund distributor based out of Mumbai. Now, today's topic is an interesting one as well, and we're going to talk about an instance or instances where the market falls by 80%.
32%.
Sorry, the market falls by 30% or 32%, and you still end up making 80%. It's something that there's no magic here. We are going to walk you through an example as to how that has happened in the past and why it could probably likely happen in the future as well. Mahesh, take us through the example. Show us the magic.
Yeah. So it is a real life example, right? So we are not doing a hypothetical case study and explaining how it is possible. This has actually happened. So we all remember one of the worst crashes in the market history, which was the IT crash, right? So March 2000 was the peak of the IT boom. So after that, the markets fell along with all the IT stocks, right?
Yeah.
And it fell actually until April 2003, which was the bottom of that market. And then there was this huge bull run, and hopefully all of us have seen that. And 2003 to 2007 was one of the biggest bull run India has ever experienced. Right? But March 2000 to March 2003 was a big crash, and 3 years is a big time. Okay, you think it is small, but it's large and
painful.
ICICI Pru Technology Fund, in an act of incredible timing, came out with its NFO in March 2000, which was the peak of the IT boom. Right?
NFO stands for New Fund Offer.
New Fund Offering. So that basically the fund started on that day. In March 2000, which happened to be the peak of the market. So now if you think about it, for the next 5 years, that 10 rupees came down to 6.8 rupees NAV. So any investor who invested in that fund would have lost 32%, right?
Over a 5 year
would have
frame.
lost 32%.
So 5 years, painful.
Yeah, 5 long painful years, he would have lost 32%. But think of the guy who did an SIP in that fund, the systematic investment plan. So this guy invested at let's say end of the month in March, and then every month he invested 10,000 rupees and kept investing all through the fall. So basically, the way we recommend to people that once you do something, then you be at it, stick with it. Anybody who did an SIP of 10,000 rupees per month from March 2000 and held on till 5 years, that is March 2005, he would have invested 6 lakhs, right? 10,000 is 1,20,000 per annum into 5 is 6 lakhs. Do you even know what the value of that SIP was at the end of those 5 years? The value of that investment?
Of that 6 lakhs.
Yeah, invested amount is 6 lakhs, but the value at the end of those 5 years was 10 lakh 80,000. 10 lakhs 80,000 rupees. So basically that investor would have made an absolute amount of 4 lakh 80,000 profit, which would have been effectively a 80% absolute return in that fund. So the NAV falls from 10 to 6.8, okay, and still an investor who just stuck with the SIP would have made a 80% return in those years, 80%. And the IRR, internal rate of return for people who want to know about it, is 24%. In those 5 years, the NAV is down 32% and still the IRR is 24% for an SIP. That's the power of SIP, right? And that's what you can do if you do the right thing and just stick with it. You can inevitably or end up making money even in a falling market.
I also want to make one additional point here, Mahesh. I went through those times, right?
Yeah.
The advantage the mutual fund has over direct stock investing there is, had you invested in 1 or 2 IT stocks, okay, say Infosys or Wipro didn't make money for almost 15 years, by the way. The 2000 peak till the end, it took almost 15 years to Wipro to come back to its original price. There is no way in hell I would have the patience to hold on for that long.
No.
With a mutual fund, like a Prudential, ICICI Prudential Technology Fund, it's slightly more acceptable to do SIPs in a basket of these 50, 60 stocks that they have bought, right? Hoping that the IT industry will recover at some point. But when you invest in just 1 or 2 stocks, your confidence level is almost zero. Because you have seen a fall of 80% in the stock market. I mean, the IT stocks had fallen by 80%.
Yes.
The market itself fell by 30-40%, but the IT stocks fell by like almost
80%. In fact, you're right about this point. No, so we know some of these stocks like VisualSoft. VisualSoft was one of the SSI software.
Himachal Futures, I think, was there.
And then there was Pentamedia. then there was
Media.
Himachal Futuristic. As you rightly said, they were all part of that technology basket, and I'm sure even ICICI Pru Technology Fund had those stocks. Some of those stocks have become zero, right?
Yes.
They no longer exist. Visual Software.
But they also had TCS and Infosys and
but because they also had the better stocks, as a fund, it has given you that kind of return. But if we had been one of the investors who went out and bought a stock ourselves, it would possibly have been a Himachal Futuristic or a Penta Media, because they were the darlings of the market at that point in time. They were supposed to be the best stocks.
If you invested even in these stocks over a period of when I was falling down, okay, it is impossible for you to be convinced that these stocks will eventually come up. Whereas there is a lot more confidence when you are buying a basket of 30, 40 stocks, right? Which is what a mutual fund does in the first place. So I think that even mentally, it's far more easier to put money into a basket of 50, 60 stocks through an SIP route, as opposed to putting money in a SIP route in individual 1 or 2 stocks. It is a lot more different psychologically. So I think this is a great example to tell people, even if markets fall by 30, 40%, you can still end up making 80%. SIPs are the way to sort of, we always recommend people to go through SIPs. And we believe that that's probably the best tool available to us as Indians to invest money in the stock.
Power of SIP.
Our SIPs. Okay, thank you for watching, guys. We hope to have more videos like this. In the meantime, if you like our content, please subscribe to us. Or if you have any questions, please write to us at hello@amsinvestments.net. See you soon. Bye-bye.
Bye.